JSE Safex style options, a great choice.
Welcome back to Wealth and Wisdom. Now we're talking about inflation. We're also talking about a little bit about Warren Buffett and some successful tips for investing that have worked timelessly over the ages. Past 40, 50 years that Warren Buffett's been investing. Now we're talking about inflation. We're saying there's a problem is that there's been not enough rain in the States, so maize prices are going up. We're also worried because the Fed has recently said they're going to print effectively $40 billion per month and use that to buy mortgage-backed securities. Now, I mean, this is quite worrying. They're just unlimited sort of, it's a bit of a blank check. It's called the Bernanke put, or the Alan Greenspan put. He was the former governor of the Federal Reserve. Basically, they're putting a floor under the market because more money is coming in. Now, the key thing we're looking at, there are two variables. Two variables, never just one. One of them is the currency, and one of them is actually what's happening with the actual asset price itself, separate to that currency. Now, one of the things I was talking about is dilution. So in effect, when you're printing more money, you're diluting each person's stake in the economy. So what's happened with the Fed since 2000, there's been a 370% increase of their balance sheet, possibly more depending on how you do the accounting. Now, that is quite expansive. In South Africa, our South African Reserve Bank's balance sheet, something that's really not talked about that much in the media. It's gone from 76 billion rand in 2000 to 440 billion rand now. That's an increase of 480%. Now, interestingly enough, in that time, the rand has actually gotten weaker to the dollar in about the different ratio, pretty close to that, of the expansion of the ratio between the two expansions. So that the Fed's 370, we 480. There's quite a close ratio. It's 1.3 times what we've increased our balance sheet compared to what they've done. So in fact, our SARB has done even more QE than they have in the States. And I mean, everyone's worried about how much they're doing in the States. So it's quite weird. Problem is, when you're looking at these currencies, you think you get a bit of a sense of inflation. Problem is, all these currencies around the world are depreciating together. And that shows up in the price of real assets. Shows up in the price of real assets, commodities. If we look at new gold ETF, it's gone up 17.66%. You know, I mean, gold in the States, something like 16%. The top 40 itself, the benchmark index, it's gone up 16%. Now, if we look at a corn ETF in the States, that's gone up 40%. You know, it's a staple food in South Africa, and we've got prices going up at 40%. So you wonder why guys are striking. This is a much bigger part of their particular inflation basket than it is for most of the people watching this show. Food is a huge moving part. Food and fuel and electricity have all rocketed up. So the real coalface inflation these oaks are experiencing is ferocious out there to all the poor guys in South Africa, because the inflation basket is corn, it's wheat, it's oil, it's electricity. These have all gone up much, much faster than a lot of the other things. So where can you protect yourself? There's several different ways you can protect yourself using products widely available through your broker on the Johannesburg Stock Exchange. One of them, currency futures. I mean, there was a great trading opportunity the other day when Moody's downgraded us and the rand went up to 9. You could trade it back. You could see that spike, possibly. It tends to come back. The rand rockets up and then it gradually comes back a bit. Not to the same low level it was at before, but it does come back. So there's opportunities there. You can invest in commodity futures, traded on the JSE, on the agricultural products and the commodity futures division. They've had phenomenal performance this year. Mr. Price. We look at Mr. Price this year, that share price has gone up 81%. You know, ShopRite, Naspers. Now, Naspers and SAB and BAT, very interesting stocks because they are rand hedges. A lot of their income, same as Richemont, a lot of their income comes from offshore. It's not in rands. So if the rand weakens, their share price tends to go up. They're also listed in other jurisdictions. So what I looked at there, which I found quite interesting, is SAB. It's up 35.79% in Johannesburg. In London, it's only up 19.48%. So the difference is 16.31. That's exactly your rand. So it's giving you that rand hedge and protecting your portfolio. So those rand hedge, big blue chip stocks, they get a lot of their income from outside South Africa. Very worthwhile to look at to protect yourself from the ravages of inflation and a rand getting weaker against the dollar and weaker against the pound. I mean, if we look at CFR, Richemont, In US dollars, it's done 20.74%. In Joburg, 26.42. So it's 15.68 against the dollar. So we've got currency futures, commodity futures, and we've got these defensive rand hedge stocks, these big blue chips that get a lot of their money from outside of South Africa, denominated in foreign currencies. Great protection. There's also another way, which is fascinating, is IDX. You can get derivatives on foreign stocks in South Africa. So you're going to get a single stock future on Apple or on Berkshire Hathaway or on ExxonMobil or on Microsoft. Any big blue chip stock from anywhere around the world, even a lot of ETFs. You can write a future on it quite easily. You can get these through Deutsche Bank, through Investec, and it's quite interesting that these guys are making markets in it. And that market's really been growing quite nicely on the JSE. In fact, last month we did R1 billion of trade in it, which I think is possibly one of the best months in that sort of segment we've ever had. So it's a very interesting way of getting exposure to international assets, protecting yourself against fluctuations in the rand and the effects of inflation. Luckily in South Africa, our stock market tends to, in the past, it's managed to keep pace with inflation, hopefully always beat inflation as well. So in this time, you don't want to have your money in the bank. Even if stocks are overvalued, as a currency depreciates, they're the best place to be. So thanks very much for watching Wealth and Wisdom. Hope you've learned a little bit about some of the machinations going on around the world with central banks' balance sheets. The best way to protect yourself is to have real assets that keep pace or hopefully beat inflation.
Wealth and Wisdom was brought to you by the Johannesburg Stock Exchange.